The Dutch economy remained in recession in the second quarter, but the GDP contraction was slightly lower than initially estimated, according to data released Tuesday. On the line to discuss what this all means for the Netherlands is Wagner. Marco, the green shoots seen in the Eurozone in the second quarter have failed to materialise here. Some economists have even labelled the country's performance in recent years as abysmal. Is the Dutch economy really so worrying?
No, it is not. The current problem of the Dutch economy is the still ongoing correction of the house prices. Since the peak in 2008, the property prices have fallen by more than 20%. This weighs extremely heavily on private consumption and, of course, on private property construction. And going forward, still I think that the house prices will further decline until the end of next year, and only then the correction should, by and large, come to an end.
Some people say the Dutch government is doing as much as possible, but is working within political constraints, while others say authorities are sticking their feet in the mud in the hope countries like Germany can pull them out of the recession. What is your take on this argument?
For one, the political situation in the Netherlands is not so easy, and true, there can be done more, of course. But on the other hand, the Netherlands already have good economic fundamentals, which make their economy internationally competitive. According to the World Economic Forum's competitiveness report, for example, Dutch businesses are highly sophisticated and innovative. The country is rapidly harnessing new technologies to improve their productivity. It has an excellent educational system, efficient markets, and the quality of its infrastructure is among the best in the world.
Even if the Dutch economy exit the EU's excessive deficit procedures in 2014, it seems uncertain to some whether more will have to be done, therefore meaning it's still unclear whether consumers and firms will get the feeling that the recession is over. Are structural reforms the only way out of this predicament?
I think this is not only a matter of the Netherlands alone. Today, in a highly interconnected world with highly integrated markets, a country's economy is strongly dependent on the world around it, say its competitors and its trading partners. And the Netherlands are an exporting nation, of course. So even the most competitive economy will follow the business cycle of its main trading partners. And as we all know, Holland's trading partners are currently not doing so well.
You mentioned the competitiveness, but the Netherlands has fallen 3 places to number 8 in the latest World Economic Forum ranking. Dutch entrepreneurs were more pessimistic about their business conditions and the order position than they were in August. Is it possible to pinpoint what is hindering investor sentiment and competitiveness?
The first is the weak domestic economy, which suffers from the house price corrections. And as I said before, I expect the prices to fall further until the end of 2014. So this issue does really not spread optimism to the Dutch companies, and neither do the exports. According to our estimates, the general recovery in the Eurozone should be very slow-paced for the time being, and as soon as the housing market stabilizes and the Eurozone recovery accelerates, I'm sure that the sentiment of Dutch investors and companies will swiftly improve.
And lastly, taking into consideration the so-called economic green shoots of the Eurozone, as well as the concerns emanating from the peripheries, how do you expect the euro to perform against the US dollar amid their own taper talks and budget negotiations?
Due to the slow recovery of the Eurozone and the persistent imbalances we have in the Eurozone, the ECB should maintain its very lax policy stance. So the US counterpart should be the main factor for US dollar and euro movements. As the Federal Reserve cancelled the tapering last week, we see the euro to remain strong against the US dollar over the next month. More concretely, until the end of 2013, courses of about 1.35 are possible. But with the tapering and first considerations of interest rate increases over the course of next year, we project the euro to depreciate to 1.25 until the end of 2014.
Marco, it has been a pleasure as always speaking to you. Thank you. Well, viewers, that's all from me for the moment, but later in the week I'll be looking at the peripheral pitfalls in Europe with a look at the French and Italian economies. So please do keep clicking back to Dukascopy TV. Bye for now.